Welcome back to My Biz CPA. My name is Daniel. Today we will be discussing Section 179. Section 179 is a component of tax depreciation available to business owners. It is designed to accelerate depreciation and reduce your current year tax liability. There are many nuances to Section 179. As such, we will be reviewing its practical application as well as limitations to be aware of. As I mentioned, Section 179 is designed to allow business owners to recover all or part of the cost of an asset that would otherwise be depreciated in the year the asset is placed in service. There are limitations on the annual amount of Section 179 a taxpayer can take, as well as reductions to the benefit based on business income and the annual amount a business owner invests in new assets. In order to take a Section 179 deduction, the property must meet certain requirements. First, it must be eligible property. Second, it must be acquired for business use. Finally, it must have been acquired by purchase. To be eligible property, the property must be one of the following types. First, tangible personal property, such as machinery and equipment used in connection with your business. Second, a single-purpose agricultural or horticultural structure qualifies as eligible property. There are also provisions for research and storage facilities used in connection with manufacturing, production, extraction, furnishing transportation, communications, electricity, gas, water, or sewage disposal services. Eligible property also includes off-the-shelf computer software and qualifying real property. Now, as I mentioned, tangible property is generally any tangible asset that isn't real property, such as real estate. This generally includes machinery and equipment. It can also include property within or attached to a building, such as refrigerators, office equipment, testing equipment, and signage. Tangible property also includes storage tanks and pumps. Finally, tangible property can also include many types of livestock, like horses, cattle, hogs, sheep, goats, mink, and other fur-bearing animals. Off-the-shelf computer software is simply defined as generic software that can be purchased by the general public. This can include the basic suite of computer software most businesses use in connection with their business. Generally, real property does not qualify for accelerated depreciation under Section 179. However, the IRS has made an exception for certain types of leasehold improvements, restaurant property, and retail improvement property. To be a qualified leasehold improvement, the improvement must be to the interior part of a non-residential building. Furthermore, the improvement must be made in connection with a lease agreement. In other words, if you own the building, then any improvements to the building would not qualify for Section 179 by virtue of the fact that you are not leasing the space. The improvements must also be made to a building that has been in service for at least 3 years. Finally, the improvement needs to be a Section 1250 property. Examples of 1250 property include decks, shingles, vapor barriers, skylights, trusses, girders, gutters, and generally the other costs in connection with leasehold improvements. While a leasehold improvement may fulfill the requirements we've reviewed, Section 179 excludes certain improvements from first-year recovery. This includes enlargements to a building, any elevator or escalator, any structural component benefiting the common area, or the internal structure framework of the building. Additionally, if the lease contract is between related parties, then the improvement would not qualify for special treatment. Restaurant property is any 1250 property improvement to a building placed in service during the tax year. Additionally, more than 50% of the building's square footage must be devoted to the preparation of meals and seating for on-premise consumption of prepared meals. Finally, retail improvement property is identical to qualified leasehold property in that the building must meet the 3-year rule, and improvements cannot include expenses for enlargement. However, retail property improvements qualify only for the portion of improvements dedicated to space available for the general public used in a retail trade. We've reviewed what qualifies as eligible property. let's briefly discuss what constitutes property acquired for business use and discuss in greater detail how the property must be acquired. Simply put, qualifying property has a business use if it is acquired for use in your trade or business. The business use requirement is actually better defined by identifying what does not constitute business use. Property you acquire only for the production of income, meaning an investment, rental property not used in your trade or business, or property that produces royalties, does not qualify for Section 179 treatment. If the asset you purchased has both a business and a non-business purpose, you can elect Section 179 on the portion of the asset that is related to the business, so long as the asset is more than a 50% business use asset. To qualify for the deduction, the property must be acquired by purchase, meaning that it cannot be acquired by gift or inheritance. Property acquired from a related party also does not qualify for Section 179 treatment. We've discussed how, what, and why property qualifies for a Section 179 deduction. Let's briefly discuss property that does not qualify for the deduction. Land and land improvements do not qualify for the deduction. Land is a non-depreciable asset, and land improvements such as swimming pools, paved parking areas, and fences are non-qualifying improvements. If you lease the property you acquire to others, you may be unable to take a Section 179 deduction. Furthermore, if the property is used predominantly to furnish a lodging or a residence, then the property would not qualify for the deduction. There are exceptions to this rule for hotels and similar establishments. Finally, property that is not used predominantly in the United States would not qualify for a Section 179 deduction. The Section 179 deduction is limited by the amount of business income you have in any given tax year. Limitations are also placed on the deduction based on the amount the IRS determines a taxpayer can take in a given year. Any portion of property you do not take a Section 179 deduction on can be depreciated over its useful life. In the event that you traded another asset in connection with your purchase, you are only able to take a Section 179 deduction for the amount you paid in cash or assumed in additional debt. The total amount of Section 179 you can elect in a given year is $500,000. You can allocate this limited amount across any number of qualifying assets you purchased in that year. Furthermore, you are not required to claim the full $500,000 amount. Qualified real property is limited to $250,000 of the maximum $500,000 deduction. These limitations are indexed to inflation and will grow throughout the years. As a matter of strategy, many taxpayers select assets with longer depreciable lives to elect Section 179. The $500,000 limit can be affected by a few factors. First, if you placed in service more than $2 million of qualifying property within the year, the Section 179 deduction dollar limit is reduced by the dollar amount over the $2 million threshold. For example, if you purchased and placed in service $2.2 million of qualifying property this year, the dollar limit for the Section 179 deduction would be $300,000. This is based on the original $500,000 limit being reduced by the $200,000 of acquisitions over the $2 million threshold. The dollar limit can also be impacted by the purchase of a vehicle, your filing status, or in rare occasions, the location of your business. The total cost you can deduct in a given year after applying the aforementioned dollar limitation is further limited to the actual amount of active trade or business income you had in a given year. In the event that you had $100,000 of business income and a $50,000 wage from employment, your Section 179 deduction would be limited to $150,000. In the event that your Section 179 deduction is in excess of the active trade or business income in that year, the unused portion can be carried forward to offset next year's income. The limitations we discussed are both at the entity and at the individual level. This means that a partnership with several partners must adhere to the $500,000 limitation and the business income limitation despite the unique tax circumstances of each partner. Additionally, individuals are subject to the same $500,000 limitation and business income limitation when preparing their personal income tax return. To help you better understand the depth of Section 179, we recommend that you review the following learning modules: bonus depreciation, agriculture tax strategies, like-kind exchanges, and entity selection. We recommend that you speak with a tax professional to review how Section 179 will impact you. If you would like to discuss Section 179 or have any other tax-related questions, please contact us at admin@mybizcpa.com or reach out to our firm, Cooper Norman, at 208-523-0862. Thank you.